Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and I'm glad to be joined by Joshua Frank, co-founder and CEO of TheTIE. Josh, thanks so much for joining us.
Thanks for having me.
Well, Josh, we spoke the last conference, and we really went deep down into what TheTIE is and the value it brings to the crypto sphere. But for those who didn't catch that, I know there was only a couple of people who actually missed that speech. If you wanted to go a little bit into the background about what TheTIE does.
Yeah, so we started as a sentiment analytics company, and what that means is basically, we looked at every single social post on the internet, and actually more specifically Twitter, and basically what we started doing is trying to quantify how positive or negative investors on Twitter were about particular assets. So we kind of started as an offshoot of a company that's the leading provider of this type of data in more traditional markets, selling that data to traditional hedge funds. We realized that, hey, if you can use sentiment data on a stock like Tesla that previously was valued based off of things like earnings, but apparently that whole thing has been thrown out the fucking window. Well, then in crypto where there's no fundamentals, I mean, now sure you can argue with these new DeFi protocols, which I'm sure we'll go into, like Uniswap, that's generating fees that will potentially accrue to the governance token. That sure there's some fundamentals there, but broadly speaking, Bitcoin doesn't have any fundamentals, right? Ethereum doesn't quote unquote have any fundamentals. And the only thing really driving the value of the asset is supply and demand, or investor sentiment, the wisdom of the crowd, how positive people are about any particular asset. So that's kind of how we started, and very much focused, these last couple of years on the institutional space. So selling data to hedge funds, who will basically build sophisticated models to trade off of that data. And so as we got deeper and deeper into the space, we realized that even more fundamental than sentiment, people in the space just had no way of monitoring what was going on. Like in traditional markets, you log into Yahoo Finance, you can see every single time that Microsoft had a stock split, a dividend, you can see all their earnings calls, you can see, they have an investor relations page. Like finding out what these companies are doing is really straightforward and it's really easy. In crypto, it's just not. Like it's incredibly difficult to have any idea what's going on when tokens have hard forks and token burns and mainnet updates, figuring out what all these different central banks are doing around digital currency. There are so many lawsuits in just even in US courts against particular token issuers that people aren't aware of, SEC filings, all these types of things. So what we basically did is we built technology that goes out, crawls the internet, it crawls 1,500 unique sources, everything from every SEC filing to regulatory rulings across the globe, court cases, legal news, et cetera, as well as like updates from tokens and updates from exchanges. And what our technology is basically able to do is notify our customers in real time of the most market moving events. So for example, we can send a customer an alert, X coin just got listed on Coinbase. Oh, and by the way, the last 17 times that token got listed on Coinbase, this was the impact on price after 1 hour, 24 hours, 7 days. This was the impact on social conversations. And we can do that, across, 50, 100 different types of, market moving events. And so we service that data to everybody from, we actually work with the 2 largest crypto publications by viewership. If you ever see breaking news in crypto, chances are it came from me. Our technology where we're pulling all that data in, they're then connecting to our platform and pulling that news. So for example, if you see news on, there was a couple court cases that got picked up last week and SEC filings and different things. So we service that type of clientele. We service exchanges that are just trying to monitor what's going on, want to integrate data, hedge funds, token issuers, you name it, really anybody that needs to know what's going on in crypto.
So you essentially positioned yourself as kind of like the Telegram, the original Telegram, the Telegraph, sorry, the Telegraph, the news wire, if you would, where essentially all the newspapers back in the day, I'm talking about in the 1900s, where they wanted to get news from around the world, they all were tapped into the same telegraph where they would get the source of information. So you're essentially an infrastructure piece that kind of is a pipeline for all things crypto related information.
Yeah, and it's not just like a stream of everything. That's the really big difference. Like there are lots of news feeds out there that will just syndicate from like everybody's YouTube and from all the different publications. The major difference between us and a news feed is that we're focused on one primary sources. So like, I don't really care what a crypto publication writes, because most of the time they're not breaking any news. And so nobody really cares. And a lot of the time they're just writing about technical analysis, and none of our clients, really care, right? What we care about is, where does that information originate? So for example, we want to be the first person to alert our customers of Kraken, receiving a banking license, right? Because that has some form of impact in the market. In the case of that, actually, the block seemed to have an exclusive, but we actually were still able to alert our customers a couple minutes before the block story broke the other day. We want to be able to alert our customers, for example, when MicroStrategy goes out and buys another $170 million worth of Bitcoin, when Fidelity launches a Bitcoin fund secretly, right? And so what we're focused on doing is not just sending them everything. What our technology actually is able to do, and our natural language processor is able to do, is isolate out what we call sig devs, or significant developments. So sure, if you want, you can see everything, but you can also say, I just want to see every M&A activity in crypto in real time. Or for example, we may have a policy editor at a publication who's like, I want to see everything legal related, right? Or we may have somebody who's focused on exchanges, and they just may want to see every update from exchanges. So there's different ways to slice and dice it, but very much focused on, show me the signal, not the noise. And certainly the publication use case is one of the best ones. But there's a plethora of other ones. If, for example, if you're a law firm and you're representing Bitfinex and Tether, and somebody's proclaiming that Tether is manipulating the market, what you're going to want to do is overlay Tether supply with every single breaking news story about the crypto market, and seeing if those breaking news stories are increasing the supply of Tether. So what we're able to do is really correlate how the market is responding to specific types of events, which can help anybody from a regulator to a law firm to a hedge fund to an exchange, token issuer, et cetera.
Very cool. Well, I remember when I first met you, and you started off with the Twitter sentiment, and it's really great to see that you've kind of built upon that and really created something, a product that I see as very valuable, and I'm sure others do as well. So kudos to you for not kind of resting on your laurels. But going forwards, let's see some use cases. Let's see, what kind of information you were able to scrape. And right now, the hottest topic is DeFi. So let's see kind of what the TIE has been able to find on DeFi.
Yeah, so just, we combined a few things from what's called our sig dev feed, which is that market moving news feed, with our sentiment, really just to understand what's being talked about in the market. And I'll actually start with this. This shows you, since June 1st, every single headline from crypto publications that mention DeFi. There are about 1,100 headlines with 3,400 unique words. And what you're seeing on the left is basically a categorized list. And just want to make sure that, is that clear for everybody, Yonah?
Yeah, I could see it. Yeah.
Excellent. So what you're seeing is basically, in order, which words are most frequently mentioned. It's so interesting. Compound around DeFi is the most frequently used word since June, followed by Chainlink, Aave, Yearn, Uniswap, Curve, Yam, SushiSwap, and Balancer. So just interesting to kind of see the social context around or the news context around DeFi, but you can also see between SushiSwap and Balancer, list and listings are a big part. So one of the biggest things that we've seen in the context of DeFi is just a lot of these exchanges had previously been very careful about what assets they were listing, but all of a sudden, like, yesterday, or not yesterday, a couple of days ago, I guess, Uniswap released their governance token, right? Uni. And all of a sudden it got listed on every exchange within 1 minute. I mean, back in the day, right, there was this massive due diligence process, and Coinbase had like 2 assets, and now all of a sudden, Binance was coming out and saying, we have this extensive due diligence process. We speak to the founder, this, that, and the other thing. And all of a sudden they list SushiSwap, and then the founder just goes AFK and takes all the money, right? So just interesting to kind of see how eager everybody is to get in, and just to kind of look at the scale of how insane DeFi has become. What you're looking at here is blue is the mentions of DeFi, orange is the mention of stable coins, and green is the mention of gold in headlines mentioning crypto. And if you just look at since June, how ridiculous it's become. Just look at that surge of DeFi. Like, you don't even need to put numbers to this, but if you look in that top, there's 3 sets of gray bars here. And so the top gray bar with the blue basically is showing you out of all the crypto headlines, which percentage mentioned DeFi? And it's pretty significant on certain days. I mean, on certain days, up to 10, 20% of every single headline mentioning crypto, not just mentions a DeFi token, actually includes the word DeFi, which is wild because if we actually added in every mention of DeFi tokens, I bet on certain days it would get up to 25, 30% of every single news headline.
Wow.
And so if we kind of zoom into Ethereum here, we can actually see, other than the word wallet, DeFi is the most frequently used word around Ethereum on Twitter, and 83% of mentions of DeFi are positive with hashtag DeFi. And when just DeFi is mentioned without hashtag, it's about 66% positive. But just to show you kind of how significant it is, you know, the majority, or not the majority, but the most discussed topic around Ethereum has become DeFi. And if we look at,
and wait, go back to that slide for 1 second.
Sure.
How come Huobi's getting so much love? 97% positive, a lot of tweets. What's going on there?
This was just yesterday. They must have listed a couple of DeFi related Ethereum assets, and usually a listing just gets positive response. So this is a day-to-day basis, but so if we'll see things pop in here, like, you know, like Pomp could tweet something super positive and then all of a sudden he goes to the top, or Donald Trump could tweet something and then he goes to the top.
Yeah.
So, you know, but broadly speaking, if we look at an everyday level, that the DeFi is kind of always there.
Yeah.
But yeah, Huobi getting a lot of love yesterday. So congrats, shouts to Huobi. And so this is actually looking at every different type of crypto topic. And if we look over the last month, DeFi has actually seen a significantly more news stories than Ethereum over the last month, just to kind of show. And interesting, and we'll hop into this, a significant percentage of that coverage is actually coming from China. So something that people aren't talking about. If we look at the publication, which has been mentioning DeFi the most, it's Chain News, which is the biggest or one of the biggest publications in China. And we can also see, you know, these other publications here are also Chinese publications that are discussing DeFi. So interesting to see that this is not a phenomenon that's, you know, locked into Western publications. We're actually seeing that this is a, you know, that similar trends are occurring out east in China. And so, you know, another interesting thing that kind of correlates with that is, you know, obviously a lot of these decentralized finance platforms are being built on top of Ethereum. So what this dark blue line is looking at is tweet volume dominance of Ethereum. Or in other words, what percentage of overall crypto tweets mention Ethereum? And a couple of weeks ago, Ethereum's percentage of overall crypto tweets hit an all-time high. So the percentage of crypto tweets that now mention Ethereum is higher than when Ethereum was at $1,400 in, you know, early 2018, late 2017. So just kind of quite significant.
Yeah.
And
before you go on, is there any correlation there between Ethereum tweet dominance and price?
So we're definitely seeing you know, correlations between raw tweets and price. I'm not sure about tweet dominance and price. It's definitely something that we can look into. I do think something that's interesting is, you know, the last time that Ethereum, if you look right here between April and July 2018, the last time Ethereum hit such a high tweet dominance, its price crashed. So not saying that that's gonna happen. You know, there's one historical precedent for it, so you can't take that as that means anything. But just interesting to see the last time that Ethereum accounted for more than 20% of overall crypto tweets, the price crashed down from $1,000 to like $97 over the course of 6 months, or whatever the, you know, 90%. So just kind of interesting to see. And the interesting correlation to me between this entire, you know, thing and tweet volume on Ethereum now and back then is, when tweet volume on Ethereum was really significant back in 2017, 2018, and the price skyrocketed, it was because of the demand for Ethereum for ICOs, right? It was because, you know, to participate in any ICO, you needed to actually have Ethereum, which drove up a massive demand for ETH and drove up the price of ETH. And I think similarly now what we're seeing with DeFi is this demand for Ethereum and for gas to pay, you know, Ethereum, you know, fees, as well as people kind of trying to capitalize on this DeFi craze. And I see a lot of, you know, correlation between what happened in the ICO boom and what's happening now. I'm not saying that every DeFi protocol is going to crash like, you know, 99.9% of utility tokens have, because I think that some of these decentralized finance platforms have more value. But certainly we're going to see, you know, there are a lot of similar traits here. And I think, you know, we're going to see a lot of volatility. And you it doesn't make, sense to me that like, if you look at, and we can, I think we shop into this more in a bit after we, go through all the data, but like the fact that like a centralized lending platform like BlockFi that has, tens of millions of dollars in monthly revenue. I think they're doing like 12 million in monthly revenue or something. And they have billions and billions in loans outstanding are worth like $500,000. And then these new DeFi platforms can pop out of nowhere and be worth billions of dollars with, in 2 days, right? Where, it doesn't make any sense, right? So I think the market is gonna, and I'm not even giving myself the original thought there. That was Barry Silbert tweeted that out. So credits to him, not trying to take originality there, but I think it's a very interesting kind of.
We could definitely dive in because I want to hear your thoughts. We'll get into that, but let's get through the slides and then we'll really start tussling on DeFi as a whole.
Yeah. So something else I wanted to just take a deeper dive into is just how big this has become. So you're looking here at Lend, which is Aave versus EOS. And what you're looking at is the dark blue line is 30-day average, or the dark lines are 30-day average sweep volume of each, and the dashed lines are market cap of each. And what we can see is that Aave, despite being, significantly smaller, I mean, obviously it's growing, but significantly smaller than Ethereum, than EOS, has now surpassed EOS in terms of Twitter activity. And one of the things that I mentioned before is that in a market void of fundamentals, sentiment is king. Right. And when investors are positive or negative about a particular asset and community is growing, that is the most important thing. And the reason that we're seeing these DeFi, protocols explode is because of community, right? And because of Twitter activity. And I think it's going to be interesting to see if this trend continues. I wouldn't be surprised if some of these DeFi platforms themselves, just like we've seen Chainlink move into the top 5 in terms of, or top 10, wherever it is now. I know it's crashed a lot in terms of market cap. I think it wouldn't shock me to see some of these decentralized finance platforms make runs like that, on the back of the size of their community, because there are really nothing else to gauge, the value of these assets. And I mentioned Chainlink as well. Something that we saw leading up to that rise in price is actually, you'll see these 2 peaks here, one around May and one between July and August. And that was basically when sentiment peaked. And we saw that massive positive investor sentiment was months before this massive run up in price. And as sentiment crashed, price followed, right? You can see sentiment crash, and it was delayed a little bit, but the crash in price followed, right? So just to kind of show you how much investor sentiment and positivity or negativity on a particular asset can impact price. And I think in the case of Chainlink, it was people were incredibly excited about all the different applications of oracles and bringing data onto the blockchain, but then realized when Chainlink got close to $20, like, holy shit, maybe this is overvalued. Kind of correlating perfectly with Stool Presidente's, entrance into, like, it was like basically the day or so, when or after, before, Dave Portnoy entered Chainlink, the market just completely crashed, And it's funny just to, really quickly, the thing that I always like to say is when nobody's talking about, crypto, buy Bitcoin, when everybody's talking about Bitcoin, or when your grandma's talking about Bitcoin, buy shitcoins, right? And so when your grandma started talking about Chainlink, it was time to start buying something else, right? When it just becomes so overhyped that everybody starts talking about it, usually means it's time to get out, right? What we care about is, or what we've seen that moves the market is, hey, when it's starting to build up this massive community, but once something starts to go mainstream and the price gets just a little bit way too out of whack, that's when we start to see these corrections happen. And the last thing I kind of want to show is the fact that, I've talked about a lot about positivity on DeFi because I like to keep a balance here. One of the bigger challenges that we've seen with decentralized finance is just the fee impact on the Ethereum network, right? And we're now seeing with, the distribution of uni tokens, how congested Ethereum has been with people trying to claim those tokens. And so, we see kind of the peak, or the recent peak of Ethereum correlates very strongly, if you see that, with ETH congestion rate hitting an all-time high. And then all of a sudden the price of ETH crashed from, $500 and whatever dollars all the way down to $360 or $70, just on the back of the fact that it cost you $40 to make a transaction on Ethereum, which is obviously just not sustainable.
Yeah, so now that we kind of saw the data there, and we got to see some interesting insights, brought by the TIE. I'd like to hear your opinion, because I know that you are a very conservative guy when it comes to risk. You seem like the type of guy who opens up a Vanguard index fund into S&P and puts his money there and doesn't touch it for the next 40 years.
I quit my full-time job to go into crypto, so that's a pretty decent risk. So
that only means that you realized how good of a bet you had, or how good of an idea you had going in, because you seem to take the more conservative side on risk. And so I want to kind of hear your thoughts on DeFi, because, by the way, when we say DeFi, we're not talking about the technology or the idea of decentralized finance. Nowadays, when we're talking about DeFi, we're essentially talking about this phenomena of yield farming,
hot dog finance, pickle finance, kimchi finance.
Exactly.
Yeah. So yeah, I mean, to your point, generally I'm more conservative. I've had my degen moments at times, I'm not going to lie. But before I started my company, so when I started my company, I realized that, hey, this is my big risk. I need to stop. But in 2016, 2017, amidst crypto's big run up, I was trading multi-times leveraged semiconductor ETFs and getting exposure to really interesting, product. Like I was trading something called SOXL intraday, and that's a 3-time leveraged semiconductor ETF. And as crypto was taking off and people were interested in Bitcoin mining, these semiconductor companies were freaking crushing it. And there were days where you can make 20% off of, you could lose a shit ton of money too, because that's this inherently what happened with leveraged ETFs. But it was a lot of fun. So I've definitely had some degenerate moments at times, but I've tried to sway away from them as a crypto founder, and also in terms of I think attracting new capital into the space. Obviously, attracting speculators is super important. To anybody who says it's not important, you're completely wrong. For any space to exist and to succeed, you need liquidity. So you need speculation. Speculation is a great thing, and driving interest. Like, we need degenerates in crypto. We do, because they drive liquidity. So definitely a great thing. But I think, as I talk, a lot of the people that we talk to are family offices. They're, more traditional investors. And I think, going out and representing the crypto community, I think we need to do a good job. And just, a lot of people, when they think about crypto, they think about the ICO bubble and they're like, oh, Bitcoin, wasn't that thing worth $20,000 a few years ago? What's it worth now? And we're like, oh, like 11K. And they're like, oh, whatever. Right. Like, we have to, I think when we go out and we represent crypto, one of the things that concerns me the most is going out and talking about yield farming and like, 4,000%, annual percentage yield, and like 0.5% hourly yield. Like, nobody's going to take that. Like, and talking about smart contracts and talking about all these kinds of things. And the thing that concerns me about DeFi, like, I don't care that people are gambling their money on these protocols. And, a lot of the people that know about smart contract risk and know what they're doing. But I think I'm just concerned that it paints our space in a bad light. And it's also just going to turn the regulatory flashlight back on crypto again, because, I mean, I'm certainly not a lawyer, but the opinion that I've heard from every lawyer is that these things are securities. And, what we're seeing, and we saw the other day, the SEC cracked down on another token issuer. I forgot what the name of it was, but fined them $6 million. We're still recovering from 2017, and regulators are still cleaning up the mess that happened in 2017. I mean, token issuers are going to continue to get clamped down on. I mean, a lot of them have been very lucky, like EOS, and only taken a $35 million fine when they raised $4 billion. But I think this is going to shine some level of regulatory spotlight on the space. And if we ever want to get something like a Bitcoin ETF approved, which is going to be absolutely massive for the space, I just hope this doesn't paint too poor of a light. So with that kind of background on why I tend to be a little bit conservative, my thoughts on DeFi are, look, there's going to be a massive opportunities to make money, right? There is unbelievable volatility in these assets. You see it in Yearn going from $0 to $40,000 to $20,000 to $30,000 to $20,000 to $30,000 to $35,000, right? And you just, you see that volatility, right? And you see these yields on these different platforms, and certainly, there are people that are taking advantage of these yields, but something to keep in mind is just the risk associated with it. I mean, in Q2 there were 5 major DeFi hacks. Have you audited the smart contract of Pickle.finance? Do you know anybody that's audited the smart contract of Pickle Finance? Like, I don't, right? Like, do you know the risk associated with that? Like, certainly these things can get hacked, but I think, look, if you're playing around with a small amount of money, look, it's the kind of thing where you could make 40,000% or you could lose it all, and just be careful with how much capital you're putting in.
Well, you mentioned this idea of regulators, and yes, with the ICO boom, and obviously regulators they're always a little late to the party, but they had teams to go after. But when we're talking about DeFi with, who they're going to bring an indictment against Chef Nomi? Who the hell Chef Nomi? As in, what are regulators even able to do when it's not known always who are the teams behind these projects? And is it a team? Is it a person? Anyone could just copy a protocol. What is going to happen?
One thing to keep in mind is that what regulators will say, and I've heard this from a lot of on-chain data companies, where regulators love crypto because it's easier to track than the US dollar. And the reason I say that, if you have a fake $100 bill, you go into a gas station and buy something, it's almost impossible to track it back to you, right? Unless they have cameras. Within crypto, the second you fiat on-ramp onto an exchange, your wallet has been tagged and you've been KYC'd, right? Like, not fiat on-ramp, sorry. The second that you take your crypto and you move it to an exchange and you get KYC'd, all of a sudden there's an identity tied to you, right? So you can track flows of capital. Like, people like to say that crypto is anonymous, and I think that's bullshit. If you look at, for example, Zcash, 80% of transactions don't even use the privacy features of Zcash. They're not even shielded transactions. So to pretend that crypto is anonymous, I just don't think is right. I think regulators know that it's actually easy to identify who these people are. We saw that with the Twitter hack, for example. Chainalysis helped the government in 2 hours track that person down. Like, if they hadn't taken that money and brought that onto an exchange and KYC'd, it wouldn't have been possible. But because they went through that process, now all of a sudden there's an associated account with it, right? And there's ways to to try to get around it, like sending your money to mixers, which will basically send capital in and then flush it out, and split it up against into a bunch of different wallets and things like that. But I certainly think that, companies like, Chainalysis and Elliptic and, among others have made significant investments, and the government certainly has, look, I'm no cryptography expert, so take what I say with some level of a grain of salt, but we actually released a podcast. Our podcast is called the Fundamental Value Podcast. You can look it up. There's an episode with Philip Gradwell. I'm not trying to show my own thing here, but
please shell away.
No, I'm not trying to. I'm trying to show Philip. Philip goes in depth into how, and you could just look up Chainalysis and the research they do, but how governments are able to, and how they can help, because it's their technology, how they can help governments kind of crack down on this kind of activity.
Yeah, well, actually, I just spoke to Kim Grauer, who's the head of research at Chainalysis 2 days ago or yesterday. Kind of all blends together with this conference. But, and yeah, she was kind of telling me, obviously they find the Twitter hacker, and they're able to track everything on the blockchain. And that's kind of this thing where, the mainstream media attempts to paint Bitcoin and cryptocurrency as kind of this illegal money that criminals are using, when, in the eyes of law enforcement, they love when criminals use Bitcoin or crypto because it's easy to track. But when I asked her about specifically DeFi projects,
yep.
Okay, Chef Nomi, he cashed out the 14 million, so there probably is a money trail there. But with the ICOs, at least there's a kind of I wonder what the legal liability. We're both not lawyers here, so we're both probably out of our depths. But I wonder what the legal liability is for someone. Let's say, if I were to go and I were to copy Uniswap and call it Yonah swap.
I love it.
And I don't know, like what, and then people lose money. Like, what would be the legal ramifications if I just copy someone else's protocols? And
one thing to keep in mind is, even if it would be impossible to stop somebody, governments can stop the fiat on-ramps. So the governments can tell Binance, they can tell Coinbase, they can tell Kraken, they can tell Bittrex, they can tell Bitfinex, they can tell every single exchange, Gemini, stop it, delist these assets. So one thing to keep in mind is, if the fiat on-ramps are closed, That the regulatory risk to Bitcoin is not that somebody can close Bitcoin. You can't shut off the Bitcoin network, but you can stop the fiat on ramps, and that's the biggest risk. So that to me is the risk. But I do think, to be fair, Gemini is the most cautious exchange as it comes to listing any assets, and they have started to list decentralized finance assets. They have a BIT license, they have a New York Trust license. I mean, they're serious about regulation, and they're starting to list these assets. I'm sure their lawyers know a hell of a lot better than I do. So I think it it's going to depend on the asset. I'm sure some people are going to get in trouble. Who those people are, I'm not sure yet. But I can't imagine this is going to entirely skirt regulators. If you go online and you look at, there's something called SAM, which is the U.S. government website. It's called the System for Award Management, where they award out government contracts. There are a number of contracts that basically is the government asking people to help them understand DeFi.
Really? So the spotlight has already been turned on DeFi in terms of the regulators.
You can't. How could they ignore it? Right? I mean, it's not like they don't open the news, right? They have people there are people in the government that like crypto and that follow crypto, right? And clearly there's out of the entire SEC, has to be at least one or multiple people that know what's going on. And to think, I think is just ridiculous.
That's funny. Now you just put this image in my mind of in the basement of the SEC. There's some guy yield farming,
Hester Pierce is yield farming.
Hester Pierce. She started off with the yams, and then she got out right in time, and she was in sushi early on. But that's just a fun
dip on hot dog.
Okay, so now let's get into this idea where, up until now, DeFi's been around for a while. I remember going to crypto conferences, 2-3 years ago, and DeFi existed. It wasn't main stage. Main stage was at some point was ICOs and various things, but DeFi had a spot on the side stage where 5 people would show up. And it kind of existed, but only recently has it kind of morphed into or kind of tilted into this new idea, because when I first heard the DeFi of decentralized finance, I'm like, oh, cool. Everyone could be a bank. So if I want to now take out a loan to buy a house, or if I want to take out a loan to invest in my business, instead of going to the banks where they're screwing me over with fees or whatever, I could pitch my business to the community and get a decentralized loan. And that's not really how people recently have been utilizing the lending, borrowing system. No one's really been taking the money that was lent to them and putting it, into real world value.
Look, crypto is a speculator game, right? But it's not just crypto. Right now, the best businesses, and I was having a conversation about this yesterday, and I said this, and I love what I said. So the best business to be in right now is a degenerate business across the board, not just in crypto. You look at Robinhood, they're freaking killing it because retail traders are buying Tesla at, at 500, or we're buying Tesla at $500 a share after a 4-to-1 stock split, right? You look at sports gambling sites, they're surging, right? You look at online gambling, you look at, crypto, all these industries are surging. So across the, kind of across the playing field, the best COVID business is a degenerate business. And people are in DeFi because they're trying to make as much money as they can. People are not in, sure, maybe one person took out a loan of Sushi Swap, I don't know, whatever the hell it is, to put a mortgage on their house, and I pray for them. But across the board, it's people that are looking for yield, which is a good thing. We need, as I mentioned before, you need liquidity. And so maybe there are use cases for DeFi that will kind of take hold that are real use cases, but speculation is certainly a real use case. I mean, there's, sure, you can make a shiny necklace out of gold, but one part of gold's use is just the speculatory aspect of it, right? People think gold is valuable because they like the shiny object and they think it's going to go up in value later in time. So why should crypto be any different?
Well, speculation is healthy for a market, but there is that danger side to it. If you go back to the 2007, 2008 financial crisis, that was driven by speculation that kept on building upon itself while the underlying value stayed the same or decreased. Right. And obviously the stakes are not that high here. Even if DeFi goes to zero, even if every DeFi project goes to zero tomorrow, it won't affect the world economy very much. But still, I'm getting that similar feeling because everyone's still telling me it's okay. They're just speculating amongst themselves, the same people making money off each other, no harm, no foul. But it seems like the speculation is happening off nothing. If I could get 1,000% APY, but my 1,000% APY is on a pickle token that has nothing to it.
I agree with you. I'm not disagreeing with you. My money is not in DeFi right now. I have $0 in DeFi protocol. So sure, you can make fun of me because I didn't, make, as many gains as anybody else, but I don't care because I'd rather have my money in Bitcoin in cold storage and not worry that it's going to get hacked, right? And not worry about all the risks associated. But look, certainly there are tremendous risks, right? Certainly we have not seen the end of hacks. There will be $1 billion platform that gets hacked, right? It's going to happen, and to think it's not going to happen is ridiculous. So, we're going to see more of these platforms get hacked. We're going to see people lose money. We're going to see the bubbles burst. We saw that with hot dog finance going from $4,000 down to $1,000 to $1, whatever it was, in like 20 minutes, right? So these things are going to happen. People are going to make a lot of money, and people are going to lose a lot of money. I think there's going to be some regulatory spotlight, but the thing that I've seen it with crypto time and time again is just that there's this propensity to and I did a podcast with Luke Kerner who called it shiny objects, to kind of cling to the latest shiny object. And first it was utility tokens, then it was NFTs, now it's DeFi, where it's like people are clinging to the shiniest object. And I wonder what's going to last. Like, to me,
don't forget about IEOs. IEOs were a thing for a little bit. The digital exchange officing. Yeah, there's always something. By the way, Luke Kerner, big fan. Spoke to him a couple of days ago. Crypto Mondays and Just Stable. But
yeah. So my point being, though, the only thing that has lasted the test of time so far is Bitcoin. And if you like the one thing to keep in mind is that crypto hedge funds, right? And look, a lot of them don't know what they're doing, but a lot of them do know what they're doing. A lot of them struggle to outperform Bitcoin because what happens is in a bull market like we're in now, you tend to see altcoins and these other assets outperforming because there's so much less liquidity and people are shuffling their Bitcoin winnings into these other altcoins. But when we go into bear market territory, which will inevitably happen again because we go through all these bull bear cycles within crypto, these things are going to get wrecked. And we've seen throughout Bitcoin's history that when Bitcoin is doing exorbitantly well, you'd rather have your money in alts, but when Bitcoin is doing poor, you'd rather keep your money in Bitcoin as opposed to in these other altcoins. So one of the things that funds, struggle with is outperforming Bitcoin over periods of time. So while you may make 20,000%, you could lose that all overnight, right? And the thing to keep in mind is that when you lose 50% of the value in anything, you actually need to double the value of your holdings to get that back, right? When something goes down by 75%, you need to quadruple the value of what you have, right? So things on the downside can really hurt.
And Bitcoin is not an impossible thing to replicate technologically, but I think it's kind of, it got lucky because it worked before anyone knew what it was. And right. It's impossible to replicate it at this point because, it's only secure once you get a certain amount of value into it.
Community. Everything is community. It has a community of people that are diehard believers in it, and it's a community of millions. I mean, there are people that just will not sell their Bitcoin. I mean, there's still a significant amount of Bitcoin which hasn't been moved in 3 years. Certainly some of those are people losing their keys, which is a whole nother story. There is a very large percentage of Bitcoin supply which just doesn't move. I do not sell my Bitcoin. If it went up to $15,000 tomorrow, I wouldn't sell. If it went up to $20,000 tomorrow, maybe I'd be a little bit, oh, okay, maybe it's the crash.
What's your price? What is your price that you'd sell even a little bit at?
I don't have a price because I believe in Bitcoin. I believe that this is going to continue to grow, right? The only time I'll ever move my Bitcoin is if we see these excess, ridiculous movements that don't make any sense, that aren't backed up by anything, that I just think are short term. And what I'll do is I'll sell and then I'll buy back. But I don't have a number that's like, hey, I'm going to sell because I believe in the longevity of this asset class, and it's still so small. I mean, it's still such a small percentage of the global population. And what we're seeing is that it's being increasingly adopted by millennials and by younger generations. And we're going to see the biggest shift of wealth from baby boomers to these younger generations. And baby boomers, we're buying gold, and our generation is buying Bitcoin, right? They're not going to be buying gold. So when trillions and trillions of dollars are shifted to this younger generation, what are they going to look to for a hedging asset? They're going to look to a Bitcoin, right? So in the short term, look, I have no idea where this asset's going to go. If it went to 4K tomorrow, I wouldn't be surprised, right? But in the long term, the reason I'm in crypto is because I have a long-term belief that I have a belief in the belief of the community, right? And in the fact that it's going to continue to grow.
All right. And by the way, you're speaking about your cold storage wallet. I have a feeling that is it behind that picture, that Yankee picture over your shoulder? Is that where you hid it? Is there like a vault? Is there a safe behind that? You move it?
Come break into my house and steal it. Don't worry, there's not enough Bitcoin that's worth breaking into my house. So there are plenty of people that have probably spoken at this conference that have a significantly larger stake in Bitcoin. Keep in mind, I've been a founder for 3 years, so I had to shuffle a lot of my money into my company. Maybe in a couple of years it'd be worth stealing my cold wallet, but not yet.
And lastly, before I let you go, I do notice the Yankee plaque behind you. What are your thoughts on the Yankees this season? Are they going to make it into the playoffs?
I'm knocking on wood here. We had a couple really, really bad weeks. Our hitting looked abysmal. Only hitting for home runs. Our relief pitching looked dreadful. But you can live it by the home run. You can die by the home run. We've lived by the home run, with 20 runs in a game and 13 runs in a game. Seeing Voit, who's, looking like an MVP, putting up 20 homers in a shortened season already. So I'm hopeful they're going to make the playoffs. We'll see. But, it's the home run's a blessing and a curse. And, we have to see how our pitching holds up in the playoffs, right? We got to see, how Sevy looks, how Cole looks, how Tanaka looks. So I'm hopeful, but I'm not getting ahead of myself because Stanton Stanton is kind of like a DeFi token. He can crack in 2 seconds. So, same thing with Judge, right? We're kind of fragile. So, but I'm hopeful.
You're bullish, and let's see if the Yankees are more like DeFi or more like Bitcoin. Will they stand the test of time? Joshua Frank, thank you so much for joining me here today and explaining to us, a little bit about what's going on with the sentiment side of DeFi and kind of how much it has entrenched itself into the mindset of the community. So once again, thanks for taking the time. And for all our viewers at Reimagine 2020, I'm Yonah Hochhauser. Thanks for joining.